What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we continue to see a spike in volatility as we continue to pull back from the all-time highs. Will this pullback turn into a stock market correction, or is it just a temporary pullback before we continue to go higher? Tonight we'll also look at the TNX and TLT to better understand what's going on in the rate and bond market. So first up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we went down 1.48% today and we did get a gap down open. Now this is a huge gap above that doesn't close until we get back up above SPY 430. And if I switch this over to a 1 hour chart, you could see how huge this gap really is. We gapped down below SPY 427 and we did close down here right around 425. So remember, gaps typically get filled, so you will want to pay close attention to this gap above. Now I talked about this last week and you could see we got a hard rejection on the price action at SPY 436 before this sell-off started. Remember that SPY 436 was one of those price targets that could always lead to a pullback and or possibly even a correction. So right now we're currently in pullback territory because from the all-time highs, we're currently down just about 3% from the highs. Now, normally a pullback is anywhere between 1.5% to 4.5%, and anything more than that going 5% and lower starts looking like a stock market correction. Remember, pullbacks and corrections are completely normal in all bull markets, and it's very important that you understand what kind of trader or investor you are in these markets. If you're longer term, you want to take these dips and these corrections as buying opportunities, but if you're day trading right now, technically you're trying to catch a falling knife, and you want to be very careful where your entries and exits are, and it's very important to be disciplined and have very good risk management. So let's jump back over to the daily chart and do pay attention to this gap above, because it is possible we fill that gap before we see any more downside. The important thing to notice with today's price action is we did close below our 20 simple moving average and we did lose our bullish trend. Right now, the critical support is going to be right at the 50 EMA, which is just under SPY 424 and just above SPY 423. We also have a support level right around SPY 422, so this will be a strong confluence area of support. If we lose this support level, it's very likely we're coming back down to close this gap at SPY 411, and we do also have a support trend line right around SPY 415. So that will be a very significant drop from these levels if we do break and close below SPY 422, so make sure you're well aware of that critical support level. Remember, with price action, you're looking for a bounce off of support and a takeout of a previous resistance before you start going long. You always want to set your risk below a critical support level and make sure you understand if you're in this for the long term or the short term. If you're in it for the long term, you don't really have to worry about further dips because you're just going to want to buy more. If you're in it for the short term, you want to manage your risk below these support levels because it's always possible we come back down to another support level before we see a bounce. So understand what fits your risk tolerance personally, and do understand right now this is a falling knife scenario and we are losing the bullish trend, so you no longer have the advantage of the bull trend on the daily chart. So a very likely scenario if this is going to be a stock market correction is you're going to see a typical ABC down. Right now we could be in wave A and we're very likely going to bounce and potentially close this gap above for a wave B, and then we could come back down and complete the correction for a wave C. This could be a very typical stock market correction look, and this could take us out through the rest of the month, which means we could see volatility from now until early August before we see a possible end to this correction. Now, if this is not a stock market correction and it's just a pullback, we're very likely going to find support at the 50 EMA and start bouncing from here. And if we take out this gap and continue to go higher, we will then know it was very likely just a pullback and we could be going back to brand new all-time highs. But you never want to take anything for granted when you lose the bullish trend, and it's very important now more than ever to pay very close attention to the critical price action. So right now, look for this gap to fill, but if we start seeing a reversal after that gap fill and we continue back down and close back below SPY about 428, that does mean we could be coming down to 415 or possibly 411. We still have gaps down here at SPY 400, so bad could get worse if things get out of control and we continue to see a massive wave of selling. So understand your risk could be coming all the way back down to SPY 400 and plan accordingly. I'm not saying that we have to go to SPY 400. I just want you to be aware that if we did go down there, you need to have a strategy and you need to have a plan now so that you don't get caught off guard. So look for a potential ABC down or critical support to hold up at 423 before we continue to go back higher. Next up is the NASDAQ 100 triple Qs, and we see the triple Qs going down 0.82% today, and we do see the NASDAQ 100 holding up a lot better than SPY. The reason I say that is because the triple Qs have not yet lost the bullish trend. Now, if you're on the Stocks Channel Discord, you should have been preparing for this pullback because I did post that members only video that says we could see a pullback from these levels, and we were getting a little too far extended. Right on cue, we're seeing a pullback from those levels right around 362.7, and we're now seeing the triple Qs closing below our 20 simple moving average and very close to potentially losing the bullish trend. So just like on SPY, remember this could be a pullback or we could be starting a stock market correction, which could look like an ABC down. Again, on the ABC, it's very likely in the B wave we're going to close these gaps above, and on the triple Qs, we do have a gap at 357. We could extend a little bit farther and retest resistance at 359, which was a previous price target, before we see more selling coming back down for wave C. Remember, wave C doesn't have to stop where I'm showing it here, but this is just a typical ABC down, but it's always possible the C wave extends lower and we continue to the next leg lower on a support level. So remember, you need to pay close attention to the price action because when you get volatility, it's always possible you get tricked and you see a bull trap followed by a bear trap and you could get whipsawed. Make sure you're focusing on a longer term strategy with your trade plan and that you're not switching from bear to bull, losing on both sides of the trade, because you could really beat up your trading account switching to a bull right before a sell-off and then switching to a bear right before a huge relief rally. So don't switch from bear to bull constantly if you don't know exactly what your trade plan is, because you're very likely going to get whipsawed in this volatility. So on the triple Qs, do understand we did close below our critical support level, which is that 20 simple moving average, and the next critical support is all the way down here at the 50 EMA, which is down here at 346. We have the gap to fill above right around 357 with critical resistance at 359 and 362.7. It's possible if we bounce from here as early as tomorrow, we could maintain the bullish trend, but we would need a significant price action bounce back into the 360s. So look for that because that is still a possibility, especially when you look at the rate market, which we're going to look at very soon. To the downside, you're going to have support at 352.6 and our support trend line right around 348. And of course the 50 EMA at 346. So pay attention to the price action at those levels, and remember this is always a falling knife until we see a confirmation bounce. A bounce will come off of one of these support levels and we'll see that bounce in the price action, and again you want to set your risk some percent below support. If you're in it for the long haul, you could start accumulating at these levels, but if you're a trader, you want to make sure you stop out of a losing trade. Just in case we come much lower, you can still put that cash to work at lower prices, and you can continue to play this market the next leg lower at a time. Eventually, you have to realize you have to take on risk in the stock market to get rewards. And remember, the lower the stock market goes, the more attractive it becomes. You don't want to buy stocks at all-time highs. You want to buy the dip and you want to buy at critical support, knowing what your exit strategy is so you don't get trapped in a trade. So pay close attention to these critical support levels and make sure you understand if we lose the bullish trend, the stock market will get a lot more whipsawy and you could see wild swings in either directions with the spike in the volatility. On the Dow Jones, we dropped almost 2% today, and the Dow Jones is definitely looking a lot more bearish than the S&P 500 and the triple Qs. We lost the bullish trend and we closed well below the 50 EMA, and we did close the gap down here at 340. The next critical support level will be 336.7, and if we break below that, we could be coming down to close the gap at 331.7. Upside resistance is 341.7, our 50 EMA at 342.8, and the gap closes all the way up here at 346. So that will be a resistance level to watch for on that gap fill, and above that we do still have resistance at 348 and 350. So understand the Dow Jones is losing the bull trend and it's going to be in a sideways consolidation very similar to what we saw in the Russell 2000. It did look like it was starting to break out and go into a bull trend, but that was very quickly erased by all the negativity around the travel news, and we are seeing the Dow Jones suffering as a result. We see a wave of selling on increasing volume, which is never going to be a bullish indication. On the Russell 2000, we dropped 1.5% today, and we see the Russell 2000 breaking below that critical support at 215 and getting very close to retesting the next critical support down here right around 208.5. That will be a very strong support level for the Russell 2000, and if it does break down, we will see the Russell 2000 going into a bear market. We're very close to seeing our 20 simple moving average crossing below the 50 EMA, which will confirm the full bear trend with the price action below all the moving averages. So this will be a short seller's paradise if we see the Russell 2000 breaking down any farther, and we will very likely see bears raiding the Russell 2000 and shorting every single pop at resistance. So pay attention to that and watch these resistance levels above at 215, 219, 222, and 224. Those will be key resistance levels that if we do go into a bear trend, look for short sellers stepping in at those key levels. On the ARKK ETF, we were actually up today, believe it or not, going up 0.64%, and we do see ARKK holding above that support level right around 113. ARKK lost the bullish trend, but price action is holding over this support level, and we are seeing a green day in the growth sector like ARKK, even though the rest of the stock market is selling off. So did ARKK lead the way throughout the correction, and we already saw this ABC correction down, and ARKK is already ready to go back into a bull market? That will be a very interesting story we need to pay attention to because we are seeing very low rates, which will favor growth in tech stocks. It is very likely that ARKK is already bottoming out because we also saw a green day on Friday, which we also saw a broad market sell-off on Friday as well. So that's 2 days in a row now that the ARK ETF has had a closing green day, even though the rest of the stock market was selling off and was closing in the red. So on ARKK, watch critical resistance down here right around 112.6, and below that we'll have support at 109 and 106. And we really do need to see ARKK getting back over the 50 EMA and our critical resistance at 120. Above that, we'll still have resistance right around 124 and 127. Next up on the VIX, we did see a huge spike in volatility today, which is why we see so much volatility in the market. The VIX went up almost 22% and closed above 20, sitting there at 22.49. The VIX is still making lower highs, and we are getting rejected at our resistance trend line here. But again, if the VIX closes above these levels for another day, that will be very likely we are going to see a stock market correction. So remember, the VIX above 20 always increases the probability we could be going through a correction. But right now, we could see the possibility that this is just a one-day spike in the VIX, and we see the VIX getting crushed back down lower as soon as tomorrow. So we did see that back in May where the VIX was spiking, and we did see the VIX getting crushed the next following 3 days. So watch the VIX at these levels, because if it gets above about 25, this is very likely going to be a very painful stock market correction. However, if the VIX can't close above 25 and it gets crushed back below 20, this is very likely just a pullback, and we're already going to be seeing the end of it. So watch the VIX closely, because it is going to tell us everything we need to know about whether this is going to be just a pullback or a stock market correction. Next, let's take a look at TNX, which is the rates market, and right now we are seeing the rates coming down in a big way. We see TNX dropping over 9% today, and it does look like it's coming down to close some of these gaps below. We had a gap at 1.2, and we have another gap at 1.16, and we're very close to closing that gap. There's another gap below right around 1.088, and we are very likely going to close these gaps if we continue to see the rates market dropping. This is going to be bullish for the growth sector and the tech sector, and that's very likely why we see the ARKK ETF doing so well. This is going to be very bad news for the financial sector, but if we do start seeing the TNX bouncing from these levels, it could be a great opportunity to be a contrarian investor in getting into those financial sector stocks. Also on low rates, we're going to see a strong bond market, and today we see TLT going up over 2%, and we are starting to look a little bit parabolic. So in the bond market, this is going to be bearish for the stock market if we see money leaving stocks and going into bonds, but I just don't think we're there yet. The low rates are going to be very attractive for growth stocks and tech stocks, so we still need to watch ARKK and the QQQs to see how those ETFs are going to perform in this low rate environment. Look for TLT to possibly give back some of these gains, because it did leave a huge gap open, and that gap doesn't close until we get back down to 148. We see these gaps typically get filled, and even though we are seeing a very bullish run in TLT, it's very likely we give it all back, and we give it all back very quickly. So pay attention to that and watch those price actions very closely at those critical levels. On the US dollar, we continue to see a bull run with the price action over a positive sloping 5 EMA, and we still have the full bull trend. Again, this is going to continue to put downward pressure on gold and silver, so you need to pay attention to the dollar if you're trading gold and silver. On gold, we're back below the 50 EMA, and we still do see gold finding support at that 20 simple moving average at 1795. A further breakdown, we could be finding support at 1776 or 1761, with upside resistance at 1829 and 1876. On silver, we continue to see a lot of selling, with silver coming back down to the next leg of support lower at 25.1. On a break below this support, we could be coming all the way back down to 23.5, with upside resistance now at 25.77 and our 50 EMA at 26.5. On Bitcoin, we're currently down just over 3%, and we're back near that critical support level of 30,000. Remember, if Bitcoin breaks below 30K, we could be coming back down to 27,000, 23,000, or possibly even $20,000. However, as long as Bitcoin is holding above this critical support and we continue to see buyers stepping in, it is possible we double bottom off this level and we continue to go higher. So watch critical support at 30,000 and our critical resistance at 36,000 and wait to see which direction Bitcoin is going to break first. On a break above 36,000, things will be looking a lot more bullish, and on a break below 30,000, things on Bitcoin will be looking a lot more bearish. So watch those two levels very closely and pay attention to what the price action does. On Amazon stock, we were down 0.67% today, and we see Amazon finding support right at that $3,500 level. We did close below the 20 simple moving average, but we have not yet lost the bullish trend. The next critical support level below 3,500 will be our 50 EMA at 34.48, and below that we still have support in the 3400s, and then below that we would be looking for support at 33.11. So far, Amazon does look like it's pulling back, and I still do have a price target above at 3,800, which we have not yet met. So overall, Amazon could be bouncing off of these levels and continuing to go for another leg higher, which would help the QQQs and the NASDAQ 100 go higher as well. On Tesla stock, we were actually green today, going up 0.31%, but we did get a price action close below our critical support at the 50 EMA, which is not a bullish price action close. The Tesla bulls really need to get back above 648 and then break above 658 to get to the next price target at 692. Above 692, Tesla will be looking a lot more bullish, but if Tesla breaks down below 626, we could be coming back down to 594 and possibly 546. We don't have the bullish trend anymore, but we don't have a bearish trend either, so watch the price action at these critical levels. We need to see Tesla breaking above about $660 to go back into a bull market, or breaking below 626 to go back into a bear market. So watch those two levels very closely and pay attention to what the price action is doing. On Apple stock, we dropped 2.69% today, and we came right back down to that breakout level just below 143. If we can't hold this support level, we could be coming back down to our 20 simple moving average at 140, and below that we could be coming back down to close the gap at 137. We still now have a gap above that won't close until we get to about 145.8, and we do have our resistance levels at 148 as well. Above 148, we could be going back to our next price target at 156 because we still do have the bullish trend, with price action still above our critical support at 140. So watch Apple closely because, as you know, it is a market moving stock, and if it continues to go higher from here, it could be bullish for the NASDAQ 100. On the financial sector, we dropped 2.8% today, which goes hand in hand with that TNX continuing to go much lower. We see the financial sector definitely looking like it's going into a bear market with the price action below all the moving averages, and we now have the bearish trend. So watch the financial sector because if it's going into a bear market, that will put downward pressure on the S&P 500. On the industrials, we dropped 2.09% today and closed below all of the moving averages yet again, and we're starting to develop a bearish trend. This is not great news for the Dow Jones or the S&P 500, so the bulls would really like to see the industrials getting back over that 50 EMA. The healthcare sector dropped 1.05% today and closed just above that critical support at the 20 simple moving average. The healthcare sector still has the full bull trend with price action above critical support. The energy sector dropped 3.53% today, and the energy sector gapped down, and it's way below all of the moving averages. We're seeing the energy sector looking like it's going into a bear market, but it does look like we're due for a relief rally off of these levels. The energy sector doesn't carry enough weight in the S&P 500 to really move the market, but it is looking like it does want to go into a bear market, so we will need to watch it very importantly at these critical levels. So jumping back over to the S&P 500, we definitely see a spike in volatility during this pullback. From the all-time highs, we're currently down only about 3%, so that's not a stock market correction just yet, and it's still in the category of a pullback. Things can obviously get much worse very quickly, so watch these critical support levels and pay very close attention to how the price action behaves when we close the gaps above. We have gaps above and below, so it's going to be a tug-of-war battle between the bears and the bulls to see which gap will fill first. Remember, we lost the bullish trend, so you don't want to get overly aggressive to the bull side, because right now price action needs to hold above critical support, or we could be breaking down and going much lower. So remember, it's a falling knife until proven otherwise, so watch these critical support levels closely. My trade alert service called Bank Trade Alerts does very well in these high volatility markets, so if you've been considering trying out Bank Trade Alerts, now is the best time to try it out, and you can get 50% off your first month. Bank Trade Alerts only trades at TQQQs, and all you have to do is execute the trades yourself. All of the buy and sell alerts come directly to you via email and text message, and it's very simple to follow. You can find out how to join the Bank Trade Alerts by clicking on the links below. I also have the Stocks Channel Discord where I'll be doing intraday updates and analysis to help you navigate this volatile market and always stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the links below. So remember to stay patient and disciplined in this volatile market, And don't be in a hurry to buy the dip if it's a falling knife. Watch the price action at critical support and you will do just fine in this market. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.